You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Once winter comes along, and because of the storage facilities that they have for their gas are going to start to get quite low, $18 might be a low price. Like the price of gas, like they're saying it might be 2 times or even 3 times the price, because there's just going to be a shortage of gas in the whole area. If you look at the EBITDA, before at $9, it wasn't bad, but at $18 now, if you look at 2023, 2024, and 2025, just a quick calculation, you're running from about 100 million to 140 million per year. And if you look at our company evaluation of about 75 million, but 3 times the yearly flow there is like 3 times 100 to 3 times 140, you're talking 300 million to over 400 million value. And we're only valued at $75 million. So we're highly undervalued.
Welcome back to Mining Stock Education. I'm your host, Bill Powers. And in today's episode, we're getting an update from Arthur Halleran. He is the CEO of Rystad Energy, one of our sponsors that we've been speaking to and featuring for about a year and a half. And the company is getting closer to that initial goal that we talked about in our first interview with Art, which is spudding their first well at their SASB project in the Black Sea, just off the coast of Turkey. And at current gas prices, this company could potentially be flush with cash in the not too distant future. So here to talk about that and the macro developments is Art. Art, welcome back onto the show.
Thanks for having me back on again. It's important I come to give you a good update.
Absolutely. And I remember our first interview when we were going over the economics of the project. You were going to be paid $6 US per MCF. And I remember you telling me that, Bill, this is like double what you guys are getting in the States. But now you're looking at $18 per MCF. So the economics of the projects just exploded in your favor. Walk us through some of the macroeconomic situations in the Black Sea region there. What's going on in the natural gas markets?
Yeah, so some days I'm afraid I might wake up because I can't believe the price we're getting. So Turkey imports 90% of their gas, and 50% of their gas actually comes from Russia. And as you know, Russia invaded the Ukraine, and Turkey is part of NATO. At the same time, also Bulgaria imports almost 100% of their gas from Russia, and their line has now been shut off. Same with Poland. The Ukraine has shut off one of their lines, their pipelines that go through them, that's now held by the Russians. And in Europe, again, predominantly they get most of their gas also from Russia. And there's a big move to wean themselves off of Russian gas. So there's just not enough supply. And a lot of the storage facilities are only about maybe 30, some are up to 60% filled. And so there's a big demand, and the gas is just being squeezed. And so we're getting $18 MCF, that's US, in Turkey, and also $22 the last time I looked, US, in Bulgaria. And the other issue is that they feel that, like, Turkey's got 2 LNG ports, but one is privately owned and the other one is, of course, the government. And so they get 10% of their gas. But at the same time, all the other countries now in Europe are also trying to get LNG. So that's now causing a lot of problem with that supply. And they have things that they plan to do. And whatever they plan to do is going to take 2 to 3 to potentially 4 years. So you can imagine if they want to build a LNG port, that's a 2, 3, 4 year project. So you're going to see once winter comes along, and because of the storage facilities that they have for their gas are going to start to get quite low, $18 might be a low price. Like the price of gas, like they're saying it might be 2 times or even 3 times the price, because there's just going to be a shortage of gas in the whole area.
And so we should be coming online with production at that time to capitalize on those potential higher prices.
Yeah, that's correct. So if you look at the EBITDA, before at $9, it wasn't bad, but at $18 now, if you look at 2023, 2024, and 2025, just a quick calculation, you're running from about 100 million to 140 million per year. And if you look at our company evaluation of about 75 million, but 3 times the yearly flow there is like 3 times 100 to 3 times 140, you're talking 300 million to over 400 million value. And we're only valued at $75 million. So we're highly undervalued. Even when you look at the NPV 10s, so in my old presentations, based on the price deck that we got from a third party, about $9 price deck, I always said, for the reserves and the development locations, management estimate is about $250 million US, and NPV 10, that's our interest, right? That's at $9. So at $18, that's like now that's 500 million, and we're at 75 cents. So you can see that we're highly undervalued, and our shares should be substantially higher than they are at this moment.
So the market cap, as you mentioned, is about 70 million US dollars. Energy companies, what multiple are they getting now? Some oil companies get 5, but some NatGas companies with exploration upside, can't they get a 15 multiple? What are you anticipating?
I think 5 would be realistic, right? And I look and I say, okay, what can you sell? If you want to sell your company, what kind of value can you get? And usually, 5 times, I just said 3 times, like 3 times is 300 million or 450 million, because as you know, I'm not a promoter, I'm a technical guy. And even at 3 times, you're talking 300 to 400 million, and we're at, you said like 70 million. So at 5 times, 500 to 600 million. So we're severely undervalued, right?
And key to unlocking that was a financing, which you just completed a couple months ago. And you put out an announcement, you secured the rig. Walk us through the significance of this.
Yeah, and actually this is a really good opportunity because I have a lot of investors sending me emails and phone calls. They said, I've raised this money, this 11 million, 12 million US basically. Is that enough to do the whole project? And if they remember, it's always been, I needed 20 million. So what we did was, we're in the process of doing a raise, and the rig that we needed for this project, the one that drilled before, there was a window to secure it. It was working in Romania, and before they said they were open last year, but then they got a job, and I needed to get $1 million upfront fee and pay for the MOB to secure the rig to guarantee it. So I did this non-brokered private placement. I secured 11 to 12 million US. With that, I secured the rig. We just signed a definitive agreement now, totally finished on Monday. And so that rig is coming to my my field, the SASB. And in the contract, it's supposed to start moving on July, and I'm not going to split hairs because, again, investors are asking me. So if I do a rig inspection, or if there is, say, a week or 2 of trouble on the other location at the other company, it might be towards August. But by securing the rig and paying the money, and the other issue was we did a supply chain evaluation. And if you remember, there were some long lead items. So we have purchased those, which says that I will start drilling my first well July, August. Program A, which are the 5 wells and the 2 recompletions, will be finished around the end of 2022. And as you know, every time I drill the wells, I complete them, I can put them on production. And the goal is to get the first program all producing for the winter of 2023 to capture the high gas price. And that will really cause us a good acceleration to pay off our CapEx. So everybody knows now I have the rig. The rig is going to be there July, August, and I bought long lead items. I'm still in the process of looking for debt financing or potentially raising a bit more money to finish the whole program. But again, if you looked at my other presentations, that was at $9. And now with the internal cash flow, potentially we can start being self-funding a lot earlier than what I had said before.
So by, let's say, January 2024, Are we looking at 3 million US and more per month cash flow? Is that what at these prices?
No, sir. We're looking at basically double that. So
Okay.
at the old
6
price
million.
deck, at the old price deck, it was 3.7 million.
Yeah.
Free cash flow US per month. And so at $18, it's basically double that. And then after the second program, which was going to be, towards the beginning of 2024, we would have also the other program B done. And that is going to give us $7.6 million at the old price. So it'd be $15 million now.
And for investors newer to the story, we should point out you're able to do this with only a little bit amount of money up front because you have existing infrastructure in place. You have platforms, you have the piping at the bottom of the Black Sea, you have an onshore natural gas processing facility, which you'd estimate, about $500 million US are in today's prices to actually put all that in place?
Yeah, that's correct. And the other thing I want to say is that it's in really good shape. And it's underutilized, so it has a lot of room for it. And like you say, if this was a standalone project and you develop and you would have to build all this infrastructure, you couldn't do it. Whereas in this case, the CapEx is so small that we're just, putting on the gas that we know exists and then put it on production.
Okay, so we've talked about the potential market cap of the company, applying a 5 multiple to your expected cash flow, but I like the exploration upside that you've discussed on the show previously, including some mysterious 7-kilometer structure that you've identified that nobody else knows where it is but you. When do we get to test things like this? Because this is where a lot of the true upside is, even beyond the cash flow upside.
Yeah, so with my other interviews, I was in more detail, but so what I'm going to try to do is towards the end of the summer, choose 2 or 3 blocks that we've defined, and then so it's more long term. It'll go through the gazetting. So you're looking at, and we'll have good news as we go. But by the year 2 or 3, we'll start drilling and looking for the larger projects. Okay,
and you'll do it off block in the direction of the Tuna-1 discovery, which is it's 14 TCF, right? The discovery about 80 kilometers north of you.
Yeah, there's a couple of prospects. One is towards that, and one is not.
Okay,
right? But it's in the same basin. So basically, that volume of gas basically tells you that there's thermally generated gas. So the whole basin now, the burial evolution of it provided enough heat to generate gas to charge the larger structures, whereas the SASB is more biogenic. It's by bacteria, so that's why you don't have such large volumes, and that's why the concern before was about charging the larger structures, whereas with the new discoveries, that shows that the gas is most likely thermally generated.
In addition to your SASB gas field in the Black Sea, you also have onshore production and cash flow from the Cendere oil field. What are the economics of that project looking like right now at these high gas prices?
Yeah, so before, if you remember, I was saying we're making about $4 million US per year, and I believe that was at sub $100 per barrel. So with the extra price, all that extra money just goes into our pocket because we basically have set OPEX. So it's a nice little field. It just keeps chugging away.
Can we say double on that too? Double the revenue, pretty much.
I might not double the revenue, but maybe add 50%.
Okay. All right.
Yeah.
And then you have one more project in Bulgaria. This is a 1 TCF natural gas project. Any movement or any thoughts on this, considering the high gas prices?
We were having an environmental impact assessment done for the total project. And then when COVID came, we had to put that on hold. And the reason why we had to put it on hold, because you had to have townhouses, open up an office, and a lot of public meetings. And of course, with COVID, we couldn't do it. And then it kind of went to the side there for a while. And then the price of gas is like $22 US and an MCF. And they also had their gas shut off by Russia. So now they're looking for alternative sources. And what it is we have about 90,000 acres. We're 100% owner of it. It is a non-conventional gas project, so it's coal bed methane and more tighter type sands. I believe there might be channel type deposits that's more conventional. But what is known for sure is you have this large amount of gas contained in unconventional deposits. We have a 2014 third-party resource report that says there's about a TCF of gas on the property, and they say with the known recovery methods and so on, you could recover 50% of that. So that's 500 BCF. And this kind of a project, it's not if you're going to get gas, it's how much gas you're going to get and what you're going to do. The only thing that I have about this project is that right now I have such good potential in SASB that I know every dollar I put into SASB, I can get a good return in a matter of months. Whereas the Bulgarian one is going to take about 6 months or so for the environmental study. Then there'll be some time. Then you have to do a pilot project to see how much gas you get. So you're looking at 2 to 3 years. And what I'm doing, I also got a bunch of comments from investors and so on saying, look, we don't want you to lose focus on SASB. And that is a good conversation, because I find sometimes people lose focus and then they don't do a good job. They do half the job for each one. So what I'm going to do is I'm going to, and we already started to do it, is look for another company that has good sized pockets that will actually farm in or do that project, and then we get some kind of value for that.
So we go for a free ride as Trillion investors, essentially.
That's correct. Yeah, that's correct. Yeah, and then try to get some kind of value for the shares earlier than 2-3 years.
Yeah, that makes sense. And an update for listeners that aren't aware, you have a new ticker symbol in the States. It's TRLEF. Ticker in Frankfurt is ZZ62, and same ticker in Canada, TCF. Website is trillionenergy.com. Well, Art, thank you for this update. Congratulations on the raise, the securing the rig, and I'm looking forward to seeing that flame at the top of the platform there in August.
Yeah, no, thanks a lot, and for letting me give an update. And I'm really excited and quite happy now.